Welcome back to the Legal Lifeline Podcast, where we tackle the legal and financial challenges that come with personal injury claims and help you find real solutions. I'm your host, Aaron Winston, Strategy Director at Express Legal Funding. In today's episode, we're focusing on a topic that hits close to home for many accident victims: motor vehicle accident loans, also known as pre-settlement funding for car crash cases. We'll break down how these cash advances work, who qualifies, the pros and cons, and what makes Express Legal Funding a trusted name in the industry. If you're waiting on a car accident settlement and struggling to cover bills, this episode is for you. Let's explore how legal funding can provide the financial lifeline you need right when you need it most.
Are you finding yourself in that really tough spot, waiting for your car accident settlement, but, the bills are just piling up?
Yeah, it happens all the time. Medical costs, maybe lost wages. It makes daily life really hard.
Puts you in a real bind, doesn't it?
Absolutely.
Oh.
That financial stress, while you're supposed to be recovering and dealing with a legal case, it's a lot.
Today on the deep dive, we're going to explore a financial tool that might offer a way out of that pressure cooker. It's called a motor vehicle accident loan.
You might also hear terms like pre-settlement funding or maybe settlement advance, same basic idea.
Exactly. So if you're wondering, how to handle those money worries while your case is moving forward, this is definitely for you.
Now, it's really important to understand right off the bat, a motor vehicle accident loan. It's not walking into your bank for a typical loan. The way it works is quite different.
Totally different. Think of it more like a cash advance, but it's non-recourse.
And that term, non-recourse, that's the absolute key here.
It is. It basically means your obligation to pay it back is directly tied to whether you win or settle your car accident case.
Yeah. If you don't get a settlement or win in court, generally speaking, you don't owe anything back on that advance.
Which is huge.
It is. It's an advance against the money you expect to get when your case wraps up successfully. And that feature, it sounds simple, but it really shifts some of the financial risk away from you, the person who is injured, and onto the funding company.
That sounds really helpful, especially when you're up against, say, a big insurance company that might try to use your financial situation against you.
Exactly. They might try to drag things out, hoping you'll get desperate.
And the big benefit for you, the listener, is that this kind of funding can give you that immediate relief for the urgent stuff, those medical bills staring you down, the lost pay, making it hard to cover rent or groceries.
It takes away that pressure, that urge to just accept the first lowball settlement offer that comes along just because you need the cash now.
Because that pressure is real. It can really make you settle for less than your case is worth.
It absolutely can. You might leave significant money on the table just to get things over with.
So to really get a handle on how these motor vehicle accident loans work and, who they're actually for, we're going to be drawing on some info from Express Legal Funding. They're a company in this space.
Right.
Our mission today is pretty straightforward. We want to clearly explain the ins and outs of motor vehicle accident loans, like who qualifies, what's the process actually look like, and what are the really key things you need to weigh up before deciding.
Yeah, the goal is to give you the knowledge so you can figure out if a motor vehicle accident loan might be a good option for your specific situation, should you need that kind of help after a car crash.
Okay, so let's dive in. You're facing bills, the settlement's taking time. How exactly does a motor vehicle accident loan work? We've touched on it, but let's get into the details.
Like we said, people call it pre-settlement funding, settlement advance.
Right.
But yeah, it's cash before your case is done. And the crucial thing, worth saying again, is that non-recourse part.
Repayment only if you win.
Exactly. Only if there's a successful outcome in your motor vehicle accident case.
So it's not like taking on regular debt that follows you no matter what.
Precisely. It's secured or collateralized by the money you expect to get from your settlement. And because of that structure, things like credit checks or verifying your job, usually not needed.
Ah, okay. That's a big difference from a bank loan.
Huge difference. The funding company is looking at the strength of your lawsuit, your actual case, not really your personal financial history. That's key when you're thinking about how to get financial help during this time.
That really does sound like a major departure from normal lending.
It is. And these motor vehicle accident loans, they're specifically designed to help you bridge that financial gap caused by the accident, covering immediate medical stuff, lost income if you can't work, just everyday living costs that don't stop just because you got hurt in a car wreck.
Okay. So why would someone specifically look at this option, a motor vehicle accident loan? What's the main driver usually?
The main driver is almost always about easing that immediate financial crunch while the motor vehicle accident case is still going. These things can take months, sometimes years, right?
Yeah, they drag on.
And the bills don't wait. So this funding lets people handle essential costs without feeling like they have to take a quick, maybe unfair settlement from the insurance company. It gives their lawyer more breathing room to negotiate properly.
So getting a motor vehicle accident loan could actually help their lawyer fight for a better outcome.
It really can. By taking that immediate financial desperation off the table, it lets the attorney take the time needed to build a strong case and push for a settlement that truly reflects the damages. Plus, it lets the injured person focus more on getting better, not just worrying constantly about money.
And it avoids riskier options too, right? Like payday loans.
Oh, absolutely.
Yeah.
Compared to something like a payday loan with crushing interest rates, this is often seen as a much safer alternative when you're waiting on a settlement.
Okay, so it fills a really critical need. Now, for someone listening, maybe they've been in a car accident. How do they know if they might actually qualify for a motor vehicle accident loan? What are the main requirements?
Okay, there are a few key things. First, you obviously need an active personal injury claim from a motor vehicle accident. Interestingly, you often don't need to have formally filed a lawsuit yet. Just having the claim in progress can be enough.
Okay, that's good to know. It doesn't have to be in court already. What else?
You absolutely need a lawyer. And usually they need to be working on what's called a contingency fee basis.
Meaning they only get paid if you win.
Exactly. The funding company works closely with your lawyer. And the case itself, it needs to have pretty clear liability, meaning it looks likely the other party was at fault for the accident. And you need documented damages.
Like medical bills and records.
Precisely. Proof of your injuries and the costs associated with them.
Are there common reasons someone involved in a car accident would not qualify for a motor vehicle accident loan?
Yes,
Yeah.
definitely. If it's really unclear who was at fault, or fault is heavily disputed, that's often a no-go. Or if your lawyer isn't on a contingency fee.
Makes sense.
Also, if the case is super early, maybe still in the investigation phase with very little paperwork yet, it might just be too soon for the funder to assess the risk. And a big one where you live matters.
State laws.
Exactly.
Yeah.
Lawsuit funding, including motor vehicle accident loans, isn't available everywhere. Some states have restrictions or don't allow it at all. So your location after the accident is a factor.
Good point. So location is key.
It is. And beyond those basics, other things matter too, like how much do they think your settlement might be worth, how clear the fault seems, and how strong your medical proof is. These all affect eligibility for a motor vehicle accident loan.
Can you give us maybe a quick example just to make it more concrete? Who might qualify for a motor vehicle accident loan?
Sure. Let's say someone suffered a serious back injury. Maybe they were rear-ended at high speed, so fault is pretty clear.
Okay.
Their lawyer thinks the case might settle for, say, $150,000 based on the injuries and treatment needed. That person would likely qualify for a motor vehicle accident loan, maybe in the ballpark of, I don't know, $15,000 to $25,000 to help cover bills while the case proceeds.
That really helps paint a clearer picture. Okay, so if someone thinks they might fit the bill, they've had a car accident, they need help. What's the next step? How do they actually apply for a motor vehicle accident loan?
First step is finding a reputable lawsuit funding company that deals with motor vehicle accident loans. It's usually better to work directly with the funder, not a broker.
Why is that? Better terms.
Often, yeah. More direct communication, maybe better rates, more transparency generally. Brokers add another layer.
Okay, so they find a direct funder. What info do they need to give them for the motor vehicle accident loan application?
You'll need to provide all the details about your car accident case, when and where it happened, what happened, your injuries, and crucially, your lawyer's contact information. The funding company then evaluates the case. They look at liability, the damages, the insurance situation, and this almost always needs your lawyer's help.
The lawyer has to be involved.
Absolutely. They need to provide key documents and info to the funding company so they can assess the case strength.
And how quick is this whole process usually, getting the motor vehicle accident loan?
It can actually be pretty fast. Once they have all the info, especially from the attorney, approval for a motor vehicle accident loan can often happen within, say, 24 to 48 hours.
Wow, that's quick.
It can be. And getting the money, if approved, is usually fast too. Direct deposit or maybe a check. The amount, though, that varies A lot. Could be $500, could be $100,000 or even more. Really depends on the estimated value of your motor vehicle accident case.
It really sounds like the attorney is central to getting a motor vehicle accident loan. Can you expand on their role a bit more?
Totally central. Like we said, the funder relies on them for the case assessment. They provide the details on the accident, the legal strategy, what they realistically expect the settlement might be. They basically lay the groundwork for the funder's decision.
So the funding company talks directly to the lawyer to process the motor vehicle accident loan application.
Yes, that's standard. And your lawyer does more than just give info. They should also advise you on whether getting a motor vehicle accident loan is a good idea in your specific situation and talk about how it might affect your final payout. And importantly, the lawyer is the one who handles repayment of the motor vehicle accident loan out of the settlement funds when the case finally resolves. So having a really open talk with your lawyer about how much funding you actually need is critical.
What if your lawyer isn't really familiar with motor vehicle accident loans or this kind of funding? Could that cause problems?
It could, yeah. If they're not used to the process for a motor vehicle accident loan, it might slow things down while they figure out the paperwork or what info the funder needs.
Maybe some hesitation too?
Possibly. Some lawyers might be hesitant if they haven't worked with funders before. So it's probably a good idea to bring up the topic of a motor vehicle accident loan early with your attorney. Make sure they're comfortable with it and understand how it could potentially help you.
Okay, good advice. Let's shift gears slightly to repayment of the motor vehicle accident loan. Once you have the money, how does paying it back work?
One of the big advantages, as we mentioned, is usually no monthly payments. You don't start paying back the motor vehicle accident loan until and if you get a successful result in your car accident case.
Through a settlement or winning in court?
Exactly. Then the repayment for the motor vehicle accident loan comes directly out of those proceeds. Your lawyer typically handles sending the payment to the funding company from the settlement funds.
And let's cover the downside scenario. What if, unfortunately, someone doesn't win their car accident case? What happens with the motor vehicle accident loan then?
That's where the non-recourse part is so vital. Because it's non-recourse, if you don't get any money from your car accident case, you generally owe nothing back on the motor vehicle accident loan. Zero.
That's a huge safety net.
It is. That's the fundamental difference from a standard loan. And sometimes, even if you win, but the settlement for your car accident is less than everyone expected, some funders might be willing to adjust the repayment amount.
Okay, so lots of potential upsides. But what about the downsides? What are the risks people really need to be aware of before getting a motor vehicle accident loan?
Yeah, definitely things to weigh up. While the immediate cash and no repayment if you lose are big pluses, the cost is usually higher than traditional loans. The interest rates or fees can add up.
Right. It's not free money.
Not at all. And you have to watch out for hidden fees. Choosing a transparent company is key. And obviously, whatever you repay comes out of your final settlement from the car accident. That means less money in your pocket at the end.
So the advice is?
Only borrow what you absolutely need to get by. Don't take more just because you can. Minimize that final deduction.
Makes total sense. So if someone weighs it up and decides a motor vehicle accident loan seems right, how do they pick a good, trustworthy funding company? What should they look for?
Transparency is number one. Look for a company providing the motor vehicle accident loan that's crystal clear about their rates, all their fees, everything. If they're vague or pushy, that's a red flag.
Go direct, not broker, he said.
Generally better, yeah. And read the contract carefully. Understand exactly how repayment works. Ideally, look for simple interest, not compounding. Compounding can make the total cost balloon over time.
Simple versus compounding interest. Can you quickly explain that?
Sure. Simple interest is calculated only on the original amount you borrowed for the motor vehicle accident loan. Compounding interest is calculated on the original amount plus any interest that's already accumulated. So you end up paying interest on the interest, which grows much faster, especially if the case takes a long time.
Got it. So simple is usually better for the borrower. What else? Read reviews.
Definitely read customer reviews, see what other people's experiences were like with that company.
Are there specific questions you should definitely ask a potential company before signing up for a motor vehicle accident loan?
Absolutely. Ask them, what's the total amount I'll owe if my car accident case takes, say, 1 year, 2 years, 3 years? Get specific payoff amounts.
Good one.
Ask point blank, are there any other fees or penalties not listed here? Application fees, processing fees, anything. And ask, how quickly will I actually get the money once approved?
And red flags. Warning signs of a company to avoid for Motor vehicle accident loan.
Yeah, be wary of really complex fee structures you can't understand. High-pressure sales tactics trying to get you to borrow more than you asked for, or just a general lack of transparency about how repayment is calculated. Trust your gut. If it feels off, walk away.
Okay. There seem to be quite a few myths or misunderstandings about motor vehicle accident loans floating around. Can we maybe bust a few of those for people?
Yeah, great idea. Myth number one, it's just like a regular loan. We've covered the non-recourse part makes it totally different.
Right. Myth two, it hurts your credit score.
Nope. Most motor vehicle accident loan funders don't do credit checks, so it has zero impact on your credit rating.
What about how long it takes? People think it takes weeks.
That's often a myth too. Like we said, reputable companies specializing in motor vehicle accident loans can often get funds to you in just a day or two after approval, much faster than many expect.
Okay. Another one. Does the funding company take control of your case?
Absolutely not. That's a big misconception. You and your lawyer stay 100% in control of all decisions regarding your car accident claim. The funder is just providing financial backing. They have no say in your legal strategy.
And can you borrow like an unlimited amount with a motor vehicle accident loan?
Definitely not. Funders typically advance only a percentage of the estimated settlement value for your car accident case, usually somewhere between 10% and maybe 20%.
Why the limit?
They do that to manage their risk, but also to make sure there's still a good chunk of the settlement left for you after the advance is repaid.
Okay, last myth. Is this funding only for people who are totally broke?
Not necessarily. While it's crucial for people in dire straits, others use a motor vehicle accident loan more strategically. It helps them resist the pressure to take a lowball offer from the insurance company, even if they could technically scrape by otherwise. It levels the playing field a bit.
That's super helpful for clearing things up. Let's get back to the money itself. What's a realistic range someone might actually receive from a motor vehicle accident loan?
Yeah, we touched on it, but the range is wide. It could be as low as $500 for smaller needs or go up to $100,000, sometimes even more for really catastrophic injury cases with high expected settlements.
And what decides that amount?
Several things factor in. The biggest is usually the estimated settlement value of your motor vehicle accident case. Then there's the clarity of liability. How strong is the case that the other party was at fault? The severity of your injuries and the documented medical costs play a huge role. And pragmatically, the insurance policy limits involved. You can't get blood from a stone.
The available insurance matters. Can you give maybe another couple of quick examples of funding amounts for a motor vehicle accident loan?
Sure. Maybe a case with, say, moderate injuries, clear fault, lawyer estimates a $75,000 settlement potential. You might qualify for a motor vehicle accident loan around $7,500 to $15,000 in that 10-20% range.
Okay.
Or a much more severe case, maybe permanent injuries, high medical bills, clear liability, and good insurance coverage, projected settlement $300,000 plus. That person might be able to get a motor vehicle accident loan of, say, $30,000 to $60,000, depending on the funder's assessment.
Always remember.
Only take what you truly need. Just because you can get more doesn't mean you should. Every dollar you borrow has to be paid back, plus fees or interest from your settlement.
Okay. Now, a big question. How does getting a motor vehicle accident loan actually impact the settlement negotiations? Does it affect the final amount?
It's interesting. Getting a motor vehicle accident loan itself doesn't directly lower the value of your car accident case. Your injuries are still your injuries. The fault is still the fault.
So the insurance company doesn't say, oh, they got funding, let's offer less.
Not typically, no. They usually don't even know you got funding, or it doesn't factor into their valuation of the claim itself. In fact, as we discussed, by relieving your financial pressure, it can actually strengthen your lawyer's negotiating position. You're not forced to settle low out of desperation.
But, and this is the important part, the repayment does come out of the settlement, right?
Absolutely. That's the trade-off. The total repayment amount for the motor vehicle accident loan, including all costs, gets deducted from the gross settlement before you get your share. So your net take-home amount from the car accident settlement will be lower.
Okay, critical distinction. What if the car accident case just drags on, takes way longer than anyone expected? How does that affect the motor vehicle accident loan?
Yeah, that happens. Most motor vehicle accident loan agreements account for this possibility. You still won't have monthly payments, but the fees or interest will keep accumulating for as long as the case is open.
And that's where simple versus compounding interest really matters again.
Hugely matters. If it's compounding interest, A case that takes years instead of months can mean the amount you owe back on the motor vehicle accident loan grows significantly larger than you might have initially thought. Simple interest grows slower, more predictably.
So a long car accident case means a higher repayment cost for the motor vehicle accident loan, potentially much higher with compounding.
Exactly. And if the case goes on for a very long time, you might even need to seek additional funding later, which eats even further into your final settlement. It just highlights again, read that contract, understand the interest type, and talk to your lawyer about realistic timelines before you sign up for a motor vehicle accident loan.
Makes sense. Lastly, before we wrap up, are there other options people should think about besides a motor vehicle accident loan if they need money while waiting for a settlement?
Yes, it's always good to look at everything. You could consider a personal loan from a bank or credit union, maybe use credit cards if it's short term, or potentially borrow from family or friends if that's an option.
But they work differently.
Very differently. Personal loans, credit cards, they usually require a good credit score, and you have to make those monthly payments, whether you win your car accident case or not. That's a big risk, borrowing from family. That can sometimes strain relationships.
So the motor vehicle accident loan offers that unique non-recourse safety net.
Exactly. No credit check usually, and no repayment if you lose. That's the distinct advantage for many people injured in a car accident who are facing that long wait for a settlement.
This has been incredibly thorough, a real deep dive into motor vehicle accident loans. To bring it all together, what's the key takeaway you want listeners to remember?
I think the main thing is that a motor vehicle accident loan can be a really valuable lifeline. It provides crucial financial support when you're in a tough spot after a car accident. But you absolutely have to understand how they work.
Know the details.
Know the details. Remember, it's non-recourse payback only if you win. Be super aware of the costs involved, the fees, the interest. Choose a transparent funder. And honestly, the most important thing, talk it through thoroughly with your attorney before you do anything. Make sure it's the right move for your specific car accident case and financial situation.
That's fantastic advice. So a final thought for you, the listener. Now that you have a much better grasp of how a motor vehicle accident loan works, what factors would you consider most important if you were in that position, needing financial help while waiting on your car accident settlement? Something to really mull over.
And if you do want to learn more or think a motor vehicle accident loan might be right for you, definitely do your homework. Research reputable legal funding companies. And always talk to your lawyer first. They're your best guide to making an informed decision that protects your interests after a car accident.